Hey everyone, welcome back to my channel. Today we're going to be diving into one of the most important documents you'll encounter when applying for a mortgage, the loan estimate. This document is packed with crucial information that helps you understand the costs, the terms, the fees associated with your home loan. Whether you're a first-time home buyer or a realtor trying to better serve your clients, understanding this form will empower you to make informed decisions and truly compare different mortgage offers. So let's get a basic understanding of this form. The loan estimate is a 3-page form that breaks down the essential details of your mortgage. Page 1 provides a snapshot of the loan's terms, monthly payments, and a summary of the closing costs. Page 2 details all the fees involved with obtaining your mortgage. These range from lender fees to title insurance, and so much more. We'll break that down here shortly. Page 3 includes additional financial calculations and important disclosures about your loan, including the APR, the annual percentage rate, and total interest percentage, the TIP, and other considerations like loan assumptions and servicing. Understanding these pages help you compare apples to apples when shopping for mortgages. And yes, you should be shopping around. So let's dissect page 1 of a typical loan estimate. At the top, you'll see lender's information. Who is offering you this given loan? Then under that, you'll see a general information section. This includes information like the date issued, the applicant's name, and the property address that the loan is going to go for. You'll see the sales price as well, loan terms, whether it's a purchase or is this a refinance. You do get a loan estimate on a refinance, and if the rate is fixed or adjustable. The loan ID is also on there, and it's the lender's specific number for your loan. And the rate lock tells you if and when your interest rate is locked. Now, I am showing you an example of this from an actual purchase, so some of the information I'm showing is blacked out, but it should give you a gist of what you're looking for. One thing to note, when you're comparing loan estimate to loan estimate from lender A to lender B, it's better to compare a locked loan estimate because some of those fees that can change will no longer change. So below that section, we have the loan term section. This includes your loan amount, interest rate, and monthly principal and interest payment. It indicates if there's a prepayment penalty or a balloon payment. Below that, we have a projected payment section. This breaks down your total monthly payment and includes what's going into your escrow account for taxes and insurance. And then we have costs at closing. This shows the total estimated closing costs and the estimated cash to close, which is a combination of your down payment and any remaining closing costs you might have. Remember, all these figures on this document are estimates, so they might adjust as you move closer to closing. Typically, we hope that these numbers will decrease though, not increase. Moving on to page 2, which in my opinion is the most important one to truly understand so you can best shop around. This is all about the fees, right? This page is divided into several sections, each outlining a different type of charge that will be collected or associated with your mortgage. One thing to note, this loan estimate is a standard form, so every bank, every lender, every loan officer should be able to provide you one at a moment's notice. The first section is Section A, Origination Charges. This is where you'll find costs directly from the lender, such as an application fee if there is one, an underwriting fee, any points paid to lower your interest rate, as well as an origination fee. These are often the largest costs and crucial in determining your loan's affordability. Section B is titled Services You Cannot Shop For. These are fees for services that the lender chooses and you typically cannot shop around for them. It includes the appraisal fee, which pays for a professional to evaluate the property and ensure it's worth what you're planning to pay for it. This is crucial for the lender's confidence in their investment in your home. Other fees you'll see in this section are a verification of employment fee. There's some various lender fees, for example, a tax cert or a flood document, as well as a credit report. When you're shopping around and comparing lender to lender, you want to pay close attention to sections A and B. These are the two that are going to differ the most from lender to lender, right? You might have the same rate being offered by two banks, but if you look at Section A, you'll see exactly how much it costs to get that rate. Now moving on to Section C, these are services you can shop for. Now, even though it's titled Fees That You Can Shop For, typically on a purchase, the seller is going to be the one that's determining the title agency. Because this is something you can shop for, however, you can make it part of your negotiations that you want to go through a specific title company. So, Section C, for the most part, look at it as title fees. Once again, when you're going from lender to lender, these are going to be consistent no matter who you go through because the title fees are not going to change whether you use myself or Bank of America or any other bank. So Section D is the total loan cost. This section simply totals the costs from sections A, B, and C, giving you a straightforward look at all loan-related charges you're expected to pay. Now let's move over to Section E, taxes and government fees. These are unavoidable charges set by the government, by the county, by the state, And these include fees like recording fees, transfer taxes, county tax stamps, and other things that you might encounter. The specifics, however, can vary greatly depending on where the property is located, and those can add a substantial amount to your closing costs. In Arizona, we don't have transfer taxes or county tax stamps, so my Section E might look a little bit less than your Section E, as really there's only recording fees for mortgage and the deed. Section F is the prepaids. This section covers items that you pay in advance as a part of the closing. It typically includes the homeowner's insurance premium, because just like with your car insurance, your homeowner's insurance needs to be paid in full up front, prepaid interest, and possibly mortgage insurance if your down payment is less than 20%. Just for your information, prepaid interest is calculated from the day you close to the end of the month, so if you close later in the month, this amount will be smaller than if you close earlier in the month. Section G, this is your initial escrow payment at closing. If you do choose to have an escrow account, this section outlines the initial payment for property taxes and homeowner's insurance that the lender will start collecting and then pay on your behalf when it comes time for those to be paid. This ensures that there's enough in the account to cover these expenses when they're due. Now, with some banks and some lenders and some products, you can choose to waive escrows and pay those on your own. However, if you choose not to do that, you will see these fees in your loan estimate. Section H, this is the other section. Here you might find a variety of other costs that don't really apply to anything that was covered in the prior sections. You'll see things like homeowners association fees. Some homeowners associations have transfer taxes, capital gains fees. Maybe they'll collect a little bit of prepaid. Maybe they'll collect a little bit of dues up front. If you're buying a condominium, there might be fees associated with that specific condominium. If you choose to get a home warranty plan, this will be listed here. These are specifics to your property and terms are negotiated during the sale, but the fees here, once again, aren't really going to change depending on who you go through with the lender. And then after that, we have the total other costs. This combines the sections E, F, G, and H, providing a total of all other costs not directly related to the loan itself. Section J, this is your total cost. This is the sum of all the fees that we've seen so far added together. Here's where you may also see some lender credits, which is often a discount that's provided by the lender to help offset some of your closing costs. Now, the rate you choose, the bank you go with, that's all going to determine how much or how little you'll see here, but be sure to ask your loan officer to see if there's any available to be given. So understanding each of these sections on page 2 and how they add up is crucial. As the process progresses though, please keep in mind these numbers can and often do change. It's vital to keep in touch with your lender, with your loan officer, to understand why these changes occur and how they affect your total cost at closing. Now, to recap, Section A and Section B, these are where you're going to see the differences while shopping around for a loan. The other sections that we covered, Section C all the way to Section H, those are going to stay exactly the same no matter who you go with for your bank. And at the start of the process, we're just trying to do our best estimate of what we feel like these fees will be. So as you shop around, remember, Section A, Section B, those are going to tell you who's giving you the best deal. And now finally, page 3 rounds out the loan estimate with some additional important information. Right? You'll have some contact information, which is details about your lender, your loan officer, and possibly a mortgage broker if one is involved in your transaction. This is handy to kind of keep around, keep saved inside of an important folder for your loan process on your computer. So that way you always have the contact information of who you need to reach out to with any questions or clarification. So this next section includes the totals you have paid in 5 years, the APR, and the total interest percentage, the TPI, which reflects the total amount of interest you'll pay over the loan term as a percentage of your loan amount. It'll tell you if you're paying more in interest through the life of the loan or not. And then there's other considerations on there about whether your loan can be assumed, whether your loan can be transferred to another servicer, and any requirements for homeowners insurance. So once again, we're kind of covering the basics for this last section. So if there are any questions that you have, feel free to reach out directly to me, leave a comment below, or reach out to your current loan officer if you're in the middle of a home purchase or a refinance. Now, at the beginning of the process, you will be asked to e-sign or to sign this loan estimate. Keep in mind, when you go to sign this document, you are not signing saying, I agree to this as it stands. You're only acknowledging that you received this document. Remember, a lot of these fees are going to change, hopefully for the better. So it'd kind of be silly to sign right now saying, I'm good with these, don't worry about taking away any other fees, I'm happy with it. No, you're signing that you've received this document. So hopefully you found this helpful as we walked through a full walkthrough, but relatively quick walkthrough of your loan estimate. Remember, this document is designed to give you a transparent view of your potential mortgage costs and condition. Use it to compare offers and ask the right questions. If anything changes significantly during your loan process, your lender is required to provide an updated loan estimate, especially when you lock your loan. Always stay informed and consult with financial advisors or your loan officer to understand each detail. If you have questions, need a second opinion, feel free to reach out, leave a comment, shoot me a DM. I'm here for you. Thanks for watching. Make sure to like, subscribe, and share for more insightful mortgage tips. Good luck with your home buying journey, and I'll see you in the next video.